man, I missed that.
Oh man, we are back. And
God, is that good?
Where the hell have we been, dude?
Summer, baby.
Lone Lab Podcast, episode 7. We said every 2 weeks. We took a month off.
It's summer.
Hand up.
It's on us. But we're back.
We are so back. Welcome everybody to Lone Lab Podcast, episode 7. We are sorry that it's been a while, but hey, we're back. I'm with the magical, the wonderful, the mystical, the man, the myth, the legend, Mr. Weber. James.
What's up, man?
It's good to be
I think
back.
Mexico messed us up. I'm going to blame it on the Mexico trip because that, like, we were all pumped up. We had the portable mics, then we came back here, and the momentum wasn't there.
Oh my gosh. It's summer, man.
It's really just summer, but I'm
No
grasping at
excuses,
straws
but we're
here.
giving a lot of excuses. It's good to be back. We're back.
It's
Let's
great
put it
to be
behind
back
us.
in the lab. I will say that this feels damn good.
We vowed that we need to get back on it. We've just been busy. It's been busy with helping serve a lot of clients. I'll tell you
things
that
have been
much.
busy with work. Also, just getting you and me in the office on the same day at the same time and carving out what we usually do anywhere from like an hour and a half to even 3 hours
Sure.
for this to prep and record and, do the editing and everything. So it's not easy in the summer when everyone's got so much going on. We've got so much business going on, but we're going to make much more of a conscious effort to make this regular again.
We're going to. The people have been asking where have you boys been? So we
do this for the people.
Yes. So we're sorry, but we're back. Welcome to Lone Lab Podcast again, episode 7. Grateful for you guys to be listening, watching, wherever you are doing so. It is July 1st, halfway through the year, James. July 1st, as we're recording, hoping to get this out before July 4th holiday. That would be awesome if we can get it out this weekend. But if not, it'll be right after that. We're getting prepped here for nice little weekend. But for
June
6
was
months,
nuts.
Crazy month and crazy in the good sense of a lot of families helped and served in the month of June, which is awesome.
No doubt. It wasn't summer here until like mid-June. Now we're in this heat wave and people are complaining. I'm like, no more complaining. We didn't have nice weather consistently until just a couple weeks ago.
Without a doubt. But yeah, so been super busy from a work schedule standpoint. Like we said, a lot of families helped over the last couple months. I think we kind of talked about this between, now July 4th holiday and then through Labor Day, a little bit of a slow kind of lull, I would say.
Yeah,
it's not going to compare to last month.
If you talked to me in the last week or two, you've probably heard me say dog days of summer a couple times. I love that saying because it's true. There's not much going on right now. It's July 1st. Tuesday, it's a Tuesday, 4 p.m., people are already going on vacation. Like the 4th being on a Friday, people are saying, I'll take off Wednesday and Thursday. I'm just going to get out of here.
No doubt. But yeah, it's been a great first half of the year. I know we've been looking at the leaderboards within the company. We've been up there, and that only means we've just been helping as many people as possible, which is awesome. So we're super grateful for all that.
Yeah, business is good, but again, no excuses. This is a priority for us, and that's why we're back, and that's why we're going to make it more regular again.
Without a doubt. So we're going to have a full episode today. We're going to do mortgage rates in a minute, but we're going to throw a little twist on mortgage rates in a minute, which is nice. We're going to have our lab tested questions. We actually have like 5 lab tested questions, which is awesome.
Which we love.
The people are like, where are you guys at? We want to hear about our lab tested questions. So
I'm surprised there's not more. 5 is a good number, but
we're going to answer them. And then we do have a special guest today, maybe a new segment called the G-Spot. Mr. Garrett O'Neill, who is a mortgage advisor here at LeaderOne, will be joining us at the end of the episode.
Colleague.
Yeah, great dude. Doing
Awesome
some
dude.
Philanthropy, charity projects, foundation that ties into some mortgage terms, loans, and helping out some really great people. So he's going to be on at the end of the episode.
What he's doing is really important, and everyone needs to listen to that. It's cool.
No doubt. Let's hop right in it. Anything else on the intro, man? It's just been, like we said,
No, let's get to biz.
Let's do it, baby. Let's do mortgage rates in a minute. Today, give me like a 10-second spiel. Just talked about it.
I like what we're going to do because it's a little bit different today. But the good news is what we've been asking for has happened in the sense that mortgage rates have been dropping slowly. We haven't seen some crazy dip. It's gotten people excited. It's gotten people a little bit off the fence. A lot of it is right now, guys, because of this. It's a headline market. Each and every day we're seeing different news, whether that's domestically here in just our normal equities and stock markets, bond markets, or overseas geopolitically. Obviously, hate talking about this too much, but the bombing of Iran, that was a big left hook for like the whole world. Now, it didn't shake things up as much as people would have thought it would have, but it was still a shakeup.
Actually, a lot of shits went down since we
Big time.
since we last recorded, and all of that stuff affects mortgage rates one way or the other.
Yeah.
Now, not as pertinent maybe to mortgage rates, but in the grand scheme of, like you said, domestically, economically, the bombing of Iran, that whole spiel that went down, I mean, that definitely affected the market. So there's been a lot of shit going down.
I've had the disclaimer of like, we don't want to get too political here, and I'm not even doing that, but the president has been begging for lower interest rates. First, he tried with the tariffs, right? Walked some of that back, and now there's the trade deals. There's a lot going on. We could talk about that for an hour. But then it's the bombing of Iran. It's like we don't want to liken all of that stuff to mortgage rates or interest rates in general, but like these black swan events that we're but saying rates will drop if that kind of stuff happens, we're kind of living in that. So it's a real watch and see type of scenario right now. And I'm all here for it.
No doubt. I was actually, just another piece on that, I was actually listening to the chief economist of NAR. He did a Zoom consultation. I was listening to him, and I think he put it into perspective Larry Yoon. I was trying to think of his name. Larry Yoon. Awesome call that I got to listen to, but he was putting in perspective just from a human level about the bombing of Iran, war.
You don't hope for that stuff.
We don't hope for that. Gosh, I mean, we pray that it doesn't happen.
No.
Like that is so terrible, but it does affect things in our mortgage world, this kind of matrix of the mortgage that we live in.
Sometimes more drastically than others. For whatever reason, that news came out over the weekend. I was getting texts from people like, in the mortgage space, like, what's going to happen Monday?
Yeah.
Asking my opinion about things. And it's like, I have no clue. Like, you would expect a pretty massive stock market sell-off, but that didn't really happen.
No. And like I said,
we're seeing the Dow and the S&P close at record highs.
I know.
Day after day.
It's crazy. But yeah, I mean, just on that whole, like I said, we pray that doesn't happen.
No.
But when it does happen, in our space, being on the Loan Lab podcast, trying to give information and educate, we have to talk about it. We have to talk about it. So a lot of shits went down, but for mortgage rates in a minute, we are going to listen to a clip from Fed Chair Jerome Powell. Do you like him or do you not? I don't know.
I'm fed up talking about him and people being like, he's right, he's wrong. I am under my opinion, right? Mortgage rates should be lower right now. They're still what I would think, let's call it like artificially high, just like they were artificially low during the COVID years. So the Fed meets 8 times a year. We just had one, right, where they're basically, the big headline right now is, at least to start the meeting, is the Fed lowering interest rates. Now, again, not mortgage rates, but are they lowering the federal funds rate, which that news is always large. But what's even bigger is the commentary that Jerome Powell comes up with, what he's saying. The market either loves it or hates it. Kind of recently, he's just been keeping the same tone about not cutting rates yet, but we still have expectation of perhaps 2 rate cuts happening in this calendar year. We're halfway through the year. We're not like we're running out of time, but they're going to happen. If they're going to happen, they're going to happen pretty soon here.
Well, let's listen to this clip and kind of react to it because it does address housing affordability in our country. And I think it's something that's really good to react to for our mortgage rates in a minute.
We see the same thing you do in the housing market. It's tough. There's not people are locked in. They can't afford to get out of their house because the cost of getting to a higher mortgage, higher price mortgage would be a lot. So the best thing we can do, though, is to get inflation sustainably down to 2% and have it stay there over a long period of time, And that is really what we can offer to them. And I think, so if you go back to the beginning of the pandemic when we cut to zero and we did all those programs, we really saved the housing industry because they're the front line for interest rates. At a time like this, when rates are, I would say modestly restrictive, not even moderately, but modestly restrictive, they feel it and their customers feel it. We understand that, but we only have one tool for the whole economy, not just for housing. So it's something we consider, but we have to consider the bigger picture. And I do think in the medium term, as rates come down, you'll see normalization in housing. Of course, there'll still be a national housing shortage. I don't know about your district, but
yeah. No, there's a shortage.
Yeah.
I mean, considering the macroeconomics of interest rates, I mean, how much consideration do you take housing into that decision as you address interest rates?
You know, we're always briefed on it. We always talk about it. We always look at it. But at the end of the day, it's the big U.S. economy, the whole aggregate thing that matters. We also talk about the agricultural economy a lot as well. But ultimately, and manufacturing, it's got to be the whole, and not any one particular piece.
My quick thought, right? And I watched that as well. It's evident that he does feel that, of course, housing is important. What I don't like in the beginning of the video is how he says that they saved the housing industry during COVID.
The same thing, dude.
I mean, the Fed, basically what they were buying trillions of mortgage-backed securities per month using housing to help get out of COVID. Now, of course, it didn't work to a T because while it did kind of save the economy back then, now we're dealing with all the inflation because they printed so much money.
Yeah, I don't think it saved housing, like you said. I think they use housing to...
As a kickstand almost.
As a kickstand.
Or a trampoline,
Yes,
whatever you want to.
without a doubt. My initial reaction is I'm the same way with Jerome Powell's. Like, I think everybody in the mortgage industry, like, give or take with whoever the Fed chair is. Janet Yellen, remember her? Like, we usually don't like these people just because we want lower rates. I thought his answer or just brief on housing was actually pretty solid. And I usually don't say that about Jerome Powell. Maybe I can nitpick a few things. Like I said, saving the housing industry.
Yeah.
No way.
He's doing a good job there of keeping it macro, and they've referenced macroeconomics there. It's not just the housing market. When we talk about interest rates, it's not just mortgage rates. It's the federal funds rate. It's every single, money is borrowed and lent every single day. And of course that's at a cost.
One thing I wanted to ask you about your opinion on him saying rates are modestly. I think he said he started with saying moderately and then was like, I think it's modestly high. I don't think everybody agrees with that, but I sort of do in the sense of like where rates have historically been. What's your take on like his verbiage on modestly, moderately high for interest rates?
We've talked about, interest rates in the teens, in the 80s and previous generation talking about that, but home prices being so different. So it's not an apples to apples comparison. But like you said, historically speaking, what we have right now, when you're looking in your mid to high sixes on just an average 30-year fixed mortgage, that is average. Historically speaking, that is average.
It was almost like a little ass saving by him, right? He included that moderately term, but didn't talk about how home prices are kind of, because he did say there's going to be a housing shortage, which is true. And we've been telling everybody that, and just the statistics show that. So he kind of went about in a roundabout way of including both of those points, just not saying it.
We've had so many people on the fence. I was having a conversation this morning with a buddy and his wife. I was like, well, if interest rates are going to be in the fives next year, like people are saying, should we wait? And if, covering the cost of waiting, opportunity costs so often, and frankly, right now with our clients, nearly on every call, right? That's just simple economics as well. Supply and demand. Rates go down into the mid fives. Great, everyone's high fiving, but the home that gets 3 offers gets 30. I know we've said this before, but it's really worth mentioning again because Jerome Powell and other people, they have to take that into consideration as well. If mortgage rates just start slashing, that's going to happen quickly, and we'll be in a very similar situation to where we were before, where people are buying homes sight unseen, making maybe not the best financial decisions. Like there's so much more education and consulting that goes into our meetings with clients right now.
And I think that just brings me into my next point, what you just said. He mentioned the term stabilization, and those are words, right? But But
they're not empty words.
No, they're not. And we've been preaching that the whole time we've had this podcast, and he's saying it right there. There needs to be stabilization, and there's a certain route to get there, and it's not slashing rates like you've saying. We want to see the fireworks. I think you said this last episode. Fireworks are rates going lower, slow. Then stabilization comes after that, and that's what the housing market needs. There can't be a huge dip. There can't be a huge raise, because then that's what happened during COVID, like we keep saying.
Yeah.
So they're not empty words, right? They are words, but he said the word stabilization, and I loved that because that's what people don't really want to hear. That I was even looking through the comments,
but it's funny because people always dog on Powell, and like Trump will do the same.
Without a doubt,
he's like, this guy's a lawyer. He's not an economist, but like Trump was the one that hired him in the first place.
No doubt. Let me look through some of these comments of some of and I get it, right? They're saying lower rates. This jerk is an absolute clueless person and is bankrupting America on purpose. Powell is the only person keeping America afloat, making decisions based on logic. There's a good one. He's 100% correct. This guy is becoming our new enemy under Fauci. It's just back and forth.
You're just
right?
going to see all that ridiculous stuff, right?
I think whatever, I don't know, politically too, right? Like, I don't think him and Trump get along. So if you're a big Trump person, you're probably not going to like Jerome Powell.
Mm-hmm.
Again, I'm indifferent with him, and I think a lot of us are in the industry. I think you were just saying, like, I'm sick of talking about him. Like, we're always talking about these people.
We can only control what we can control. I can't control what Jerome Powell goes up and says at the Fed meeting minutes,
I do, though. That being said, and I don't know if you feel the same way. Me personally, I thought it was a pretty solid minute little clip answer about housing.
He often talks around things, and while he stumbles once or twice, like you said, it is pretty concise and to the point. Like he's conveying the message he wants to convey.
Last thing on the clip was at the end, he was asked about how much do you look into housing as you're kind of looking at the economics of the country, and I thought he was pretty straightforward.
Mm-hmm.
Like, hey, we're looking at the big picture. Yes, I'm getting briefed on it. It's not my main focus, though. We're looking at agricultural, manufacturing. So this guy is not the puppet master that everybody thinks he is, I think, although he could be portrayed as that, depending on how you look at it.
It's no secret that housing is such a large part of our economy, right? Like that, we don't even have to talk about that. So I do think he's stiff-arming a little bit, starting to go into those other sectors and talk about it a bit. But at the same time, he's still referencing it, and that's important.
For sure. Well, I thought that was fun, man. I mean, if you guys liked, kind of us reacting to those sort of clips or reacting to that clip, let us know. We'll definitely try and do more of that. I think that's a good differentiator from our normal segments, but it's something that we definitely need to talk about. I know they meet about 8 times a year, but that was like one of a semi-annual monetary policy kind of forum that he has. So it's kind of a big deal when he gets up there and talks.
Very big deal. And we can always talk about our opinions on interest rates and where the market's going and all that stuff. But then you're kind of getting it from the horse's mouth on our podcast. So I like that idea too. Start doing a little bit more of that.
So if you guys like that, please let us know. And I think we're going to start working that into more episodes. We'll find some clips that we can react to. But yeah, I think just to end the mortgage rates in about, how many minutes was that? We always say mortgage rates in a minute, and it's
Ends
usually
up being
about 15. Mortgage rates in about 17 minutes. Full steam ahead on everything. We'll keep you guys updated. But
buyers are excited. Sellers are excited. It's a fun time.
It is. It truly is. Awesome. All right, well, let's get into our favorite, the best segment, loan or lab tested questions. We had a bunch of them. I think it's because A, the people miss us. B, we've been gone for about a month.
Yeah.
So we're going to read off some lab tested questions. First and foremost, let's start with our buddy, the first guest, besides best guest.
Best guest.
First guest, Mr. John Sintich, one of the best realtors in the South suburban area in the state of Illinois, I might say as well too. John asks, what's your advice for people who want to buy a house but are worried about economic uncertainty? Loaded question, Mr. John.
Yeah, and I was actually getting this on a consult yesterday because somebody was like, well, what if I change jobs or lose my job? You don't always get that question, right? And that's obviously a very large part of this because you're buying your first home. Let's say you're gainfully employed. God forbid you lose your job in 2 months. It becomes tougher to make that mortgage payment. So we can't really shield the bad stuff. Like, yeah, if you lose your job and you can't make your mortgage, bad stuff is going to happen, right? Like you can work with us and your servicer to ensure that you're protected as much as possible, but you're getting that loan at the time of closing because you are gainfully employed at that time. So economic uncertainty is huge right now, and it plays a very large part into how we handle each and every consult that we do with our clients.
Yeah, I think like you can look at that question 2 ways. It's your own personal uncertainty about economics and if that affects you personally from a job perspective, like you just addressed, right? It's a tough question to answer because we always talk about, we want to make sure people are comfortable, right?
Yeah,
and if you're not comfortable in your own job position, then it's tough to say, hey, go out there and take on a huge monthly payment or a mortgage.
And that's where I was going to go. And like the other avenue, right? Like you mentioned, you can answer this in 2 ways. I don't want to speak for you, but what I was thinking was comfortability, right? If we're going to sign somebody up for a mortgage payment, it's like, hey, this is your mortgage payment. This is the payment that you make. If rates do go up, you're comfortable because you're then below market and your payment looks good because you qualified for it We talked about it quite a few times. It's comfortable. If rates drop, which of course we hope they do, we'll get you into a lower payment, making that payment that much easier. Not to mention, of course, if things go such a way and they're supposed to, and you make more money through your career, that mortgage payment only becomes easier too.
Sure. Yeah. And then economic uncertainty from like a housing value perspective, I guess we can address, I don't know how many times we say this.
Yeah,
but
home prices aren't going to go down.
Yeah, they're not going
They're just
down.
not. There's no way they go down. And again, of course, unless there's some sort of black swan event, which we don't hope and pray for on either side of that spectrum. But if mortgage rates go down, home values will explode.
What sort of black swan event could make, I mean, we all of a sudden, Harry Potter comes out and flashes his wand and creates like 500,000 more homes. Like, I can't really think of anything. The shortage will cause home prices to go up unless there's another 2008.
I was thinking like another 2008, not even really like COVID, because the long-term play, of course, was people fleeing to bonds, but then the stock market started doing so well too at that time. But going really deep, like another Great Depression where like just the bottom falls out. But we're so protected as a country and an economy from those things happening because they've been experienced.
For sure. No, I agree. And then, I don't know, economic uncertainty, like from stock market or world war or anything like we've been kind of talking about. I mean, that's just like we kind of said, it's better for interest rates. I know it's bad to say, but that's the truth.
But that goes back to the fact that you can't time the market in anything. Time in the market is so much more important and justifiable than timing the market, which is evident by just looking at a portfolio of yours in the last, let's say, 2 months where, stocks got crushed, right? And everyone was freaking out. And now it's back and then some.
For sure. I would say control what you can control and worry about what you can control.
Right.
We all know life events happen. People lose jobs, unfortunately.
People also get married. People form families. They have children. They need more space. Those are the things that we help people with. We don't like talking about the bad things, job loss and everything. But yeah, we of course cover that in our consultations and when people ask.
So it's a great question by John, and it's valid, and a lot of people are kind of thinking that and asking that. But whenever you feel like you're comfortable, you feel like you're ready, you're going to know better from your own personal economic uncertainty than you and I will, right? But it's our job to kind of uncover that.
Every situation is different.
Yep. Awesome. All right. Well, thanks, John. He's always a great supporter of the podcast.
Oh, yeah.
He listens all the time. So He's
always
appreciate you, brother.
reposting. Yeah. Thanks, Cindy.
We appreciate you. Okay. Next one. This is from my buddy, Christian Jacobson. He asked, how about some loan details and info for those looking to become first-time rental property owners? So again, kind of loaded, but
interesting.
Yeah.
No, I like this because a first-time rental property owner doesn't necessarily mean a first-time homeowner. And I have direct experience with this, right? The condo that I still own was my first home. I bought that as a primary residence with 3% down back in 2017. It's still a rental property for me. So I didn't have to go through, the larger down payment, the more requirement, lending requirements that could potentially be put forth. It's more stringent when you own multiple homes. That never really happened for me because that primary became a rental.
And I think I'm so glad you brought that up because I think that's the
house hack.
It's the easiest path to becoming a landlord per se, or an investment property owner, is buy the home that you're going to live in first and then figure out a way to rent it out after because of those things that you mentioned. It's a lot.
The next one if you can.
Exactly. And there's a lot of, if you were just buying an investment property and not moving in, what would you say the biggest thing that holds people back is capital?
And
there's way more down payment that's needed for an investment property on a transaction,
which is risk-based, right? If you have, let's say, 3 properties, you live in your primary, you've got 3 mortgages, you do lose your job, like we talked about a moment ago, you're going to fight to make that first mortgage payment first. If you don't have anything left over to make the other 2, well, guess what? You're not going to make the other 2. So that's why those investment property loans, second home loans, are always going to be more riskier, and they have higher interest rates normally as a result.
Yeah. So I mean, like we kind of said, is house hacking is probably the best advice and info we can give you is buy your primary residence first and then figure out a way to rent it out after as you're kind of moving up in your life and moving on. There's different ways, multi-units we've talked about. Mm-hmm. You can buy a multi-unit, a 2 to 4 unit property.
I wish I did that.
So do I. Gosh, I mean, I wish I could go back and would have done that. Life happens, right? That is how it is. But you can buy multi-unit property, 2 to 4 unit. You can move into one, rent out the other units, essentially have somebody helping you pay down your mortgage or
Still
your
a primary
asset.
residence, still minimum down payment as a first-time home buyer. Right? It's true. That's the real house hacking.
Without a doubt. If you did not go that route, you're going to have to put anywhere. I mean, I think you can get away with 15% down on some conventional loans as an investment property. It's tough, but you can get away with it. But you're looking anywhere from 15 to 25% down on investment properties.
Yeah.
It's tough for first-time investors because of the capital problem.
Some people build portfolios with, multiple $100,000 single family homes. Obviously, it's less capital to get into that. But like a higher end rental, it's kind of tough for someone like, I'm buying my first home. I want it to be an investment property. Well, you go into that meeting thinking you can put down a primary minimum down payment, and that's just not the case.
So great question, Christian, and thank you for listening and submitting that question. Again, long story short, house hack, man.
Yeah.
Like we said, we wish we could have
If
gone
there
back
is
and
an
done
easy
that.
button, that's it
Yes.
in that regard.
No doubt. No doubt. All right, we're going to get into some fun ones that we had. Next question from our boy, B.
Switty.
Brady Swindler, who is a top producer at LeaderOne Financial. Great dude. We got a chance to meet him out in Mexico. He has a couple funny ones, but I think the first one we can kind of touch base on. So the first one was, my lenders are saying that they can do a 5% interest rate. Can you guys match that? How often do you get that question, or how often do you get people asking you, hey, I'm seeing this rate. Can you match? Why are they different? Can we kind of talk about that real quick? And 5%, be Switty. I think he was being tongue in cheek with that. But if somebody's telling you a 5% out there, unless it's maybe a new construction, which we can, I don't know if we even want to dive into that. I mean, we can, but getting a 5% without having to pay an enormous amount of fees is damn near impossible.
I like how you mentioned the new construction, because it's very detailed. We won't get into it too much, but like if a builder buys plots of land years ago and they have a deal with essentially with Fannie Mae or specific lending entities where they're getting in on those plots of land at that time. I just talked to somebody last week and there's like, I'm getting a 499
Same thing.
7-year ARM on this plot of land that we can then build a spec home. I'm like, go for it. That's incredible. If rates drop, I'm always your consultant. I'll always help you, but no one's ever going to be able to touch that. There's a reason that builder, who, I mean, of course, happens to be a massive entity that everyone would recognize the name. They do that to incentivize people to use them for the build, the financing, just the initial purchase of the land, everything, all in one-stop shop.
They get all of the pieces of the pie, so they can kind of manipulate some of the pieces to make it more incentivizing, like you said, to get into that specific property or use them for everything. I had this same exact example happen to me last week with a awesome past client of mine. Said the same thing. You got to take that deal. If that's the property that you want and that fits for you and your family, nobody else out there can touch that. That is how it is.
Yeah, there's really not a catch there, right? Now, there is a catch if someone's saying, I have a 5% quote from XYZ Mortgage. That's when you need to be, you kind of stick your neck out for that person. But it's tough not to be defensive in those conversations too, because you're like, what the F? What are you talking about? Send me what you're seeing. And more often than not, you're going to be seeing that you're being charged, tens of thousands of dollars to buy the rate down to that level.
Yeah, always make sure, be Switty. And I know, again, it was a great question, but he asked, about the 5%. Always make sure if you're, seeing these different quotes online or with different lenders that you're knowing what it costs to get that specific rate. There's rates out there you can get. I don't even know how low the rate sheets are going nowadays. I mean, are there in the 4s yet?
Remember, on a conventional loan, you can't charge more than 3 points or 3% of the loan amount. So getting down to that level is nearly impossible, again, unless there's some sort of crazy incentive or it's being seller paid or whatever. Yeah.
So if you're seeing rates out there that are lower than what the average rate is, there's something included in that where you're paying for that specific rate. Right. So great question, B. Switty. He had another one. Who's the better golfer between me and you? You.
It's me.
I suck.
I think you'd be good if you practice, but you just don't. You don't practice.
I don't know why.
You're a great athlete. You just got to get back into it.
I feel like if the lights are on, you get out there in an outing. Like if we're, I can turn it up a little bit, right?
No doubt. Play a scramble.
Yeah, I haven't played much golf. Jimmy's been playing a little bit more than I have. Golfing with kids and wife, it's tough, man. I mean, it's hard.
Yeah, there's some nice flexibility with our job, specifically during the week. Like Friday afternoons, I've been getting out 2-3 times a week.
Yes.
Golf on the
which
weekends is
awesome.
not a thing
No,
for me.
no.
No.
So yeah, James is definitely the better golfer. But if we throw some handicaps out there,
Yeah.
I can get a couple strokes on you.
Let's
The
do
lights
it.
are on out there.
Let's
I think
go.
I think we could have a good match.
You gotta.
We'll do it once before the end of summer.
We'll film it.
Yeah, maybe
Content.
we could get some clips.
Let's do it.
But James is definitely the better golfer. B. Switty, I think, is a really
He's a good player.
golfer.
Switty.
I think he can ball out
Yeah.
there. So thanks, Brady, for submitting your lab tested questions and for listening and supporting. He's a awesome dude, awesome loan officer over in Kansas City, right?
He's in KC.
KC. So go check him out. I think it's BSwitty5 on Instagram.
Be Switty, baby.
B. Switty. Awesome. Okay. And then let's start with this one. We always have to do this from Logan Brocop, one of our buddies.
Yep.
Will the Bears go 17-0? No, but
No.
we're making the playoffs.
Yeah, they're definitely making the playoffs. If they don't make the playoffs, I think I said this last year, but it was, kind of tongue in cheek with the rookie quarterback. If they don't make the playoffs this year, I will be extremely upset. I'm expecting them to win at least 9 games.
We're 10 weeks away.
It's very close.
I was like,
Very close.
I made myself a drink Sunday after dinner and was sitting on the couch and there was nothing on. And
Sunday Night Football,
I was just thinking about, wow.
Monday Night Opener, Vikings.
Oh my gosh.
We're going.
Oh my gosh. So no, Bears not 17-0, but we're making the playoffs. This next one from Sophie Woolard. I know who this is. She asks, should I even say this?
Go for it.
How is Sid's ass so big and her waist is so small? Because she goes to Move Pilates in Frankfurt and has you, Sophie, as a instructor.
There you go.
Go to Move Pilates in Frankfurt.
Plug it up.
One of my best friends owns Move Pilates. It's a great place. Do Pilates. Thanks for that lab tested question.
I love that. Good lab tested question.
Thank you guys always for the support, for listening, for submitting your questions. Again, it's the best. It's the best just hearing from the people out there. And I think we always have some really, really good ones. Please keep submitting those. I haven't seen, besides B. Switty, any other loan officer questions.
No, let's get some LO questions out there because you're right. I think B. Switty's the only person that's done that.
And he's part of the company too. And
Yeah.
I don't know if people, different mortgage advisors from other companies listen to this. I hope they do because we talked about this on the last episode is we need to be more collaborative in this industry. We have to. And you
Yeah,
hit it on the
it's-
head with the realtors and how they're high-fiving each other at different companies. I mean, it's
cool to see, and I would love to emulate that. I know it doesn't happen overnight. This
Sure.
isn't some sort of call to action, but if it could be, that would be awesome.
without a doubt. So thank you as always for live tested questions, and we're going to continue to knock those out. So right now we are going to kick it to ourselves with our good friend
the
G
G-Spot.
and the G Spot segment, and then we'll be right back with the end of the episode.
Let's go.
Okay, we now welcome on a very special guest, maybe a new segment to the Loan Lab podcast.
G.
Welcome to the G Spot, everybody. Mr. Garrett O'Neill, welcome to the Loan Lab podcast, my friend.
Fellas, thanks
go,
for having
G.
me.
How are you doing today, baby?
Doing amazing.
Good.
Finally getting some time to get back into the lab, so appreciate you guys having me.
I love it. I
Well,
love it. G actually came up to
It's kind of on us too.
and wanted to get onto the Loan Lab podcast. So we're thinking we're going to try him out for a little segment called the G Spot. Now, G,
The
give us a
G-Spot.
little introduction of yourself, how long you've been in the business, and what you came here to talk about today.
Yeah, so very similar upbringing to you both. Been in the business since 2017, so a little bit later, but have been fully originating loans for the past, 8 years now.
Mhm.
Dang, it's been that long, huh?
8 years. Got in, didn't know what a mortgage was, didn't know what a fixed versus adjustable.
Yeah.
And we all just kind of jumped in it together, learned from the top, and have kept the head down and banging away ever since.
I love it.
That's the
it.
mentality, man. That's
Yeah,
what you got to do.
G's been with our group since you've been in it, right?
Yeah.
Since you've been into the industry, and we've got to learn with each other.
We're so rare in that. I know we've said that a couple different times, but like the turnover in the mortgage industry, one is extremely high, but staying with the same company is very rare for that long. And we all have done that because of our leadership and the way that we all work together.
No doubt. Now, I think one cool thing about us in general is we don't just originate mortgages, but we do community work and philanthropy. And G came here to kind of talk about his philanthropy, his community work, which ties into the mortgage business as well, too.
Oh, sure.
Right, G?
Yeah, it was honestly the perfect introduction when my sister, her and her husband started a non-for-profit for wilderness therapy for veterans called CRUX Wilderness Therapy. They got that going in 2019 and have been able to serve over 200 veterans.
It's incredible.
Get out, get out in the wilderness, use that physical activity to get into a better mental and physical health spot.
And now you're essentially having a partnership with
Yes.
CRUX Wilderness, correct?
Yes.
Sorry, I don't want to butcher the name. CRUX Wilderness, Garrett is partnering with them and servicing veterans. Now, let's talk about veteran loans. My take is I think it is the most disgusting, disrespectful kind of connotation with veteran loans, VA loans out there within the industry.
Anything government, it's not just the VA, the FHA as well. Now, sometimes for FHA loans, there can be negative connotations that are true, right? Lower credit scores, lower down payments, grants, whatever. But for the VA, it's ridiculous how people scoff at an offer with VA financing on it.
It's unbelievable. Like
It's
the
the
agents,
best loan that we can write.
It
truly.
it is truly an amazing loan. So Garrett, kind of talk to us about VA loans. You're our VA specialist here within our group at LeaderOne, within the Gabrione group. Give us kind of a breakdown. What are some benefits for our veterans out there that come with VA loans?
Yeah. So what is a VA loan? The only difference between a conventional and an FHA or a VA loan is what Jimmy said. It's a government-backed loan. So it's backed by the U.S. Department of Veteran Affairs. With that comes a little bit more red tape, like you alluded to.
Which makes sense, right? If it's a government-backed loan, there's going to be some extra steps.
They're covering their ass.
It's
The government is.
it's backed by them.
Right.
It's backed by them, and that's why you see from a default rate or from a foreclosure standpoint, the defaults in the foreclosure statistics are a lot less on a VA loan compared to a conventional loan for just that. There's just a little bit more buttoning up for these veterans, and with that comes kind of that negative connotation, which doesn't put the buyer, doesn't put the seller, doesn't really put anyone in a better situation. It's just kind of that stigma that comes with a government loan.
So
Yeah,
there's
a
more-
negative stigma, which is unwarranted.
There's more red tape with these loans, but there's less foreclosure rates. So these veterans are making their payments on time, not losing their homes, but they're able to put zero money down.
These are the people that fight tooth and nail for our country. They're going to fight tooth and nail to make their mortgage payment.
I just don't understand like why agents out there don't like. I get there's red tape. I get they think that it's a tough deal to close. What sort of red tape are we talking about? Let's get it all out there. Like what are appraisal. Let's start from an appraisal
That's
standpoint.
the biggest thing.
That's going to be the biggest one. So an appraisal, there is a minimum property requirement that comes with every single VA appraisal report. And some of those additional add-ons are you can't have peeled paint. You can't have every staircase needs to have a handrail.
Health and safety
Health and
stuff.
safety. Health
right?
and safety stuff that you or I, if we were to go in, that's something that we would want in our house. The only difference is you and I might do it after the close, where
Sure.
for a VA loan, you're going to need to get that taken care of prior to closing on that transaction.
A lot of it goes back to FHA too, with the peeling paint. Everyone always asks about that. It has to do with, oddly, the year 1978. That's when builders, contractors could not use lead paint in building homes anymore. So anything before that, if there's peeling paint, it raises an alarm.
And the lead-based paint, that's a health hazard that
Yeah.
they found out about, right?
Oh yeah.
It was a health hazard. So 1978, I'm glad you remember that. I knew there was a year. I just didn't know what one it was.
Yeah.
So no peeled paint. Okay.
Can't
And we
have
need to
peeling
have
paint.
handrails. Is there anything else?
Like cracks in the sidewalk I've seen come up going up and down like a driveway, like on their actual property. But those are things that maybe a seller wouldn't be willing to fix. What we've changed recently is with the VA renovation financing, which is pretty incredible.
Yeah, the VA renovation financing opens up that, or gets rid of that stigma from right away. We're not going to need, or that seller doesn't need to do anything because we're going to be handling all the fixings
After they get their money.
After they get their money,
Yeah,
after we
it's
close
great.
on the transaction. So the sellers, they're already secured. They got their money. Our buyers, they have the home already. And now we're just giving them the money to fix those added tasks. And that has really opened the door to help get these offers accepted.
Sellers happy, buyers obviously happy. agents are thrilled. They're like, we didn't know you could do this.
Yeah.
I won a VA deal over a cash offer last month because I had offered the ability to do these repairs. They weren't needed, like we still won because it turns out the seller was actually a veteran too. So like there's that the heartstring pull worked out in that case, but it doesn't
without a
always.
doubt.
And that brings up a good point too. 95% of the homes that our clients are listing on aren't going to have these cracks, aren't going to have these handrails. So it is a very small very small portion of our business or of our buyers' business of properties that they might not be able to be as competitive on. But now with the VA renovation, we have an avenue to get those offers accepted.
Let's talk about some like borrower criteria or benefits to our veterans that they can utilize from a VA loan. I think I alluded to one about down payment percentage. Talk about that, Garrett.
Yeah, so the biggest is no down payment.
Zero.
So 0% down, you can get in. They're going to have some of the transactional costs that we've discussed in the Loan Lab before.
Sure.
But zero down payment, you're just principal and interest, 30-year fixed competitive interest rate. The other big thing is no private mortgage insurance.
Huge.
So the biggest thing in conversations that we have, do you put 20% down? Do you put 5% down? Is that I don't want to pay private mortgage insurance.
Staying more liquid, right?
Staying more liquid. Veterans have more cash flow now because they don't have that private mortgage insurance on a monthly basis, and then they're also more liquid for their additional finances. They can do those renovations where they don't need to borrow because they don't need to put a down payment. They can get those sweat equity projects done without even moving into their property, and that's all accomplished with the VA loan and putting 0% down.
Taxes as well too. I want to talk about property taxes. So exemptions. I've had two scenarios. One, my cousin who's a Marine, I closed another one, a VA loan last month, where the veteran needs to be eligible for property tax exemption. Okay. And that's dependent on disability rate, their certificate of eligibility, a bunch of different things, mortgage terms I'm throwing out there. But the cool thing is if you are eligible, you can be property tax exempt all the way up to a specific amount of home value or purchase price, meaning that veteran does not need to pay property taxes, and it's so damn well deserved.
Some people don't pay them at all.
At all.
They have zero property taxes, or others, if, again, what Jimmy said, the disability rate is in such a threshold, they pay less, which again is extremely well deserved as well.
So awesome. I think veteran loans are the best loans for the client, for the borrower in the country. And of course, there's the sentiment of these people fought for our country. It's well deserved, but also just from a number standpoint, very competitive interest rates, no mortgage insurance, 0%
no loan
down.
cap. I've done for high-end veterans, they can go buy a $4 million house and not put down $1. It's incredible.
They also have the ability to do what's called that VA streamlined refinance.
Yep.
Awesome point. Explain that, Garrett.
Yeah, so a VA streamlined refinance is just that. It's streamlining the refinance process where we do not need to view the income documents. We don't need to view the credit documents or the asset documents. We just need to show that veteran that we have a net tangible benefit and we can lower their interest rate or reduce their term. And if we can provide that benefit, we can do that streamlined refinance and just lower their interest rate without having to jump through the steps of doing a mortgage application.
Mm-hmm.
What do you think the biggest, I guess I would say, educating piece or thing you would want to get out to veterans out there to help them obtain home ownership? I mean, what would be like your number one thing that you want to put out into the ether right now to these veterans who are maybe worried about getting qualified or worried about, eligibility or those different type of things? What's your number one thing?
Number one thing would just be start early. Get the numbers, get the idea, get your plan in order. So then we can kind of back into what sort of payment are you comfortable with? What sort of purchase price are you thinking? Because that is the biggest thing with VA loans is that 0% down. They don't need much capital. They're employed. They're working with the military. They might have some income with the VA benefit as well. So they're very easy to get qualified. Our job, it's not just qualifying the buyer, but it's educating them, making sure that they're comfortable and confident with the asset that they're purchasing. So being in the market, giving yourself time, giving yourself the ability to learn and to structure your finances to grow generational wealth through real estate.
Yeah, we always preach proactivity. One of the things that we're always going to say is so important, but especially with the veterans, right? A first-time home buyer, that's a veteran. They may have no idea that if they're 10% or more disabled, they don't pay a funding fee, right? They might not think that with that 0% down payment that they can truly figure out a way to bring quite literally nothing to the closing table. There's different intricacies and ways that we can make this that much easier on the people that served our country.
It's an amazing, amazing loan product, Garrett. You're amazing at what you do with these veterans, and partnering up with CRUX as well too. It's an awesome opportunity. I think
So
you're
cool.
going to have a lot of success serving the people that deserve it the most. I don't know why there's the connotation for VA loans out there. I guess I do.
It's the
right?
difficulty with the appraisal and the repairs. That's got to be number one.
And I would say the previous backlog of just government loans and that stigma that came with the government loan, that you needed to go through an underwriter that was specific,
More strict,
to
more
that.
stringent.
And that's just not the case anymore. That was a thing of the past, where we're seeing VA loans close in 21 to 30 days, just like a conventional loan.
Yeah.
And yeah, it's more like, I guess there's more, I think you were saying red tape, but what did we just say? It's zero. You don't need to have a down payment. Like, it's easier to get a VA loan from a capital perspective, which is what's holding a lot of, pretty much most home buyers back, is I don't know where I'm going to come up with the money to put down. This loan allows you to not have to think about that down payment percentage.
That's a generational thing. In today's world, a lot of young professionals, they've got the great credit, they've got the income, but they don't have the money. Right. And that's why we see these different grant products come and go.
Yep.
They're introduced, the funds go quick, and then people are like, well, what do I do now? The veterans don't have to worry about that.
Yeah, and the appraisal piece, and Garrett, you chime in on this. I mean, Jimmy as well too. When I tell people, whether it's agents or just people within the industry, like, this is all they're looking for when it comes to the appraisal, they're like, that's it.
Yeah.
Like, I don't think that's put out there that much, that it's really that simple. And if you're working with some people like us who know that, I think it puts it into perspective. All right, it's not that big of a deal from the appraisal piece.
That's part of our job. How would a real estate agent, a listing agent that doesn't deal with many VA loans on their listings, let's say they're very listing heavy, how would they know otherwise unless you're educating them?
No doubt.
And the importance then of picking up that phone call, calling that listing agent, and let them know, yes, we are going with a VA loan, but we've done our homework. We know how to get these done, and there's nothing to worry about. Because end of the day, that's all that listing agent cares about, is they're looking out for their sellers.
For sure.
Are the sellers going to get their money? What's the path of least resistance from there? And our job's to paint that picture for the buyers.
Well, our job carries a lot of pressure in those situations because you're speaking on behalf of everybody then on the buyer side, because ultimately, if they're getting financing, everyone gets paid when we close, right? We're the ones that are giving the money. So if we're going to be able to go stick our necks out for the client, especially a veteran, and say this is extremely strong, this is what we need to do. Normally, from my experience, the listing agent loves that.
Without a doubt.
Absolutely.
Without a doubt. Well, Garrett, thank you so much for coming on. Thank you for joining us for the G Spot.
Any last
course.
words in the G spot?
Thanks for having me. Let's
go.
Let's have a wonderful 4th of July. Glad you guys were able to get back in the podcast studio, and it's kind of bad.
We're back.
Let's go, baby. You're going to do great things with CRUX. It's amazing that you're a part of this. There's always whys to this business, right?
Yeah.
And that's a great why to have to serve veterans who deserve it the
Yes,
most. So I'm excited to see where you go with this, and you're the VA guy, man. So I love it.
Let's do it.
Love it. Thanks, guys.
Thanks,
You bet,
G.
man.
All right, we are back from our segment, the G Spot with G. Garrett, thank you so much for coming on.
Thanks, G. That was great, man.
It was great. And
I like the G spot.
G
a good
spot
spot.
is nice. Yeah, let us know if you want to continue having the G Spot with Garrett on here. Garrett's doing a lot of great things for the veteran community. Like we were saying, man. I mean, it's just so important.
It really is. Yeah, and we mentioned, right, his sister is such a key proponent in that, and his brother-in-law. So, like, he's doing great for them, by them, and then, of course, for everyone that supports CRUX. And it's cool for G. It makes me feel damn good knowing that there's people in our company, in our group, doing things like that for others.
Pop over to our Loan Lab Podcast Instagram page, and we're going to tag CRUX. We're going to tag Garrett in some of these clips, and please give them both a follow. And whatever you can do to support them and their mission, we're all for it, and we wanted to give them a platform. And
Absolutely,
we'll continue to on the podcast every so often, because it's super important. There's more than just closing loans and doing all that stuff. And I'm glad G's a part of that.
Give back.
It's awesome. It's awesome. All right, let's end it up here, brother.
It's good to be back, right? I think ending on the fact that, or knowing that we'll be back sooner next time. We're not going to let the people hang. We were talking about during our break how much we loved being back in this room and doing this for you guys.
No
This
doubt.
is a great part of our day. Truly.
Some of my favorite, besides helping people, it's like my most favorite part of like what we're doing. I'm glad we're doing it. So we
talked about doing this for so long, right? Then we got it and we were humming. Then we took this break. It's like, what are we doing? Let's get back at it.
So we'll be back at it with more frequent episodes. I know we keep promising different guests. We're going to get best guest back on here.
Yeah.
I don't even know if he's in the office next to us right now. I heard some banging and maybe he's pissed off he wasn't invited to yet another episode.
He knows we're recording.
Yeah. I heard some banging on the wall, so maybe that was him. But we do promise and vow to all of you guys that we're going to continue to do this on a more regular basis, get some really great guests on here, and you can hold us to that without a doubt. But thank you as always for listening. We appreciate you guys. Hit that subscribe button.
Like, subscribe.
All of it. Do all of it,
comment.
please. Your support really helps us, and we appreciate it. So we'll see you guys next time on the Loan Lab Podcast.
Let's go.